Hey guys, Jared Wesley here of Live Traders, and it is that time of the week. It's lecture time. Guys, this week's topic is Fork That Trade, Candlestick Formations Explained. And you know what? I bit off a little bit more than I could chew this week. I put good 24, 25 slides in here. Well, I only got through about 10 or 11 of them. So we're going to make this a two-part series. I would highly recommend that you watch it because it's almost all chart slides. And we're going to talk about and look at things that you probably don't think of when you're trading. I know this because I did this lecture for our chat room, and a lot of people are like, whoa, I didn't look at things that way. Oh my gosh, Jared. So today's lecture, we dig deep, really deep into the bottoming tails of trading, the pivots, the ATR, the market conditions, the expectation. I mean, we're taking the whole gamut and putting it together today. And you're going to see that there are some trades that you probably could and should be taking that you aren't taking. And there's probably, on the flip side, a few that you are taking that you probably shouldn't be. And this lecture is going to help you do that. And again, this is just part one. Next week, we'll do part two. All right, so if you like these videos, click that like button, hammer that subscribe button. I'm Jared Wesley of Live Traders. Let's get to it. This week's lecture topic is Fork That Trade, Candlestick Formations Explained. Now again, some of you may have heard that line before, fork that trade, and you're logging off right this very moment. Don't. There will be some of that in here, but this is also new and kind of a combination lecture that I think you'll find helpful because it's not just about when to get out of a trade that's not looking good. It's also about candlestick formations and when to stay in a trade, as well as when you might want to get into a trade. Not stay in a trade, but actually get into a trade. So we're going to talk a bit about candlestick formations. I know you guys like the technical lectures, and this is certainly one of those. In fact, there are really not that many. Let me see, what do we have? 1, 2, like 4 text slides out of 25 slides, something like that. So it's like 20 out of 25, give or take, or charts. But before I get into that, I wanted to just go over this. Unwall put it up on the screen earlier, but I thought I'd put it in the lecture too so people can see it. This is Unwall's equity curve over the last, 7 months, give or take. And I'm not going to spend a long time on this, but I just thought for those of you that missed it earlier, this would be good to see. So the green line is the SPY, the S&P 500. The orange line there is the Qs, NASDAQ 100. The GLD is, I guess that's pinkish purple, is gold. And then there's Unwall's right here. And the reason I wanted to bring some of this up is obviously doing well, right? Nothing wrong with 1, 2, 3, 4 months. I mean, in 4 months, he was up 45%, 50%. I mean, that's pretty damn good, right? And remember, and I think many of you know this, during this period, let's be fair, the markets were up a lot, right? The markets are up 25, 30%. How often do the Qs and the SPY go up 25 to 30% in 4 months? Not that often. And Unwall was still beating the pants off the market. Then come, I guess it was mid-March, he pulled back, only up 30%. And then since then, he's just been absolutely killing it. You're talking about 2.5 months from 30% up to 80%. And as he said before, and you can see it in the equity curve, a lot of this is because he's not cookie jarring trades. He's not getting caught in. You can see right here, there's 1 or 2 trades. There's one here, there's one here, there's one over here. Right? There's just a few trades here or there that are eating up huge amounts of money. So he's basically cutting them much quicker. If it's not doing what he wants, he gets out and just moves on. So a very, very impressive equity curve. I mean, in a 7-month period where the market has been quite good, let's be honest, guys, in this same period, the market is up some 30%, and he's up more than double the market. Really process that for a second. I think all of us would take a 30% market every year for the rest of our lives because you'd be richer than Warren Buffett. Right? That's double what Warren Buffett gets. I'm almost up 80% here. So impressive, guys, in the 7-month period. And why am I showing to you? Not just because of the impressive result, but because no matter how much experience you have, and Unwall has a lot, no matter how much experience you have, you're still learning. We're all always learning. right? All of us, okay? There's things we can be better at, and he realized that, hey, while I'm doing well, I'm cookie jarring too many trades. I'm getting caught once in a while. Not often, but it's enough to take away 2 weeks worth of profits. So I don't want to do that anymore. And what's happened since? His equity curve is exploding, right? So exactly, never-ending refinement. And that's the way you get better, no matter what. You cannot rest on your laurels, guys. You have to look at stock trading in the stock market as professional sports, right? I don't care if you're number one in the world. If you sit on your ass, you're not going to be. You know who's a great example of that? Mike Tyson. Remember Mike Tyson back in the day? He couldn't be stopped, and then he lost to Buster Douglas. And remember what he said? He said, I got so bored with fighting, I would wait as long as I possibly could to train for the next fight. So maybe normally I would start training 4 months before a fight. Then it would be 3 months. Then it would be 2 months. Then it would be 1 month. He got so bored of it or whatever, it was winning too easily. His ego got in front of him, and he's like, well, I'm just going to see how long I can wait and still beat people. Guess what? He got knocked out, right? And that's what the market will do to you. If you just sit back complacent, go, oh, I'm too good for this. Well, the market's going to teach you and humble you. So don't do that. And Unmal is still perfecting his approach to the markets, doing a great job. All right, so let's start with this one. Fork that trade. Why am I so accurate? I'm still pretty accurate, guys, with this. In fact, yesterday I told you guys on both trades they weren't going to work at one point in the trade, and neither one of them worked. So, yeah, the 13.6, by the way, Yaroslav, is way down. I mean, at one point, maybe 20 years ago, his 30-year average was like 16 or 18%. Well, the crazy part is over that 30-year period, Yaroslav, the market's up like 11 or 12%. So really, Warren hasn't been much better than the market over the last 30 years. He's better, don't get me wrong, but it was before that, 60s, 70s, 80s, early 90s, where he really just, the tech thing kind of threw him for a loop. All right, fork that trade. What does this mean, guys? This means being objective and mindful about this trade and stock that you're in. Now, I want to be clear, and we will talk about this. If you're an all-or-nothing trader, some of this doesn't matter, but it doesn't mean it's not useful, helpful, and you can't learn from it, okay? I want to be clear about that. So some people are like, well, I can't fork my trades. I'm an all-or-nothing trader. Well, so you don't want to know when a stock is not likely to work anymore? You don't care? It might affect your trading later on. You might not do all or nothing forever, or it might affect the type of trades that you take. Or you might throw a rule that you have all or nothing, but within the first 2 minutes of a trade, if XYZ happens, you're allowed to get out. So fork that trade is a very powerful and potent concept, and you should be relatively accurate with regard to this. And you're not going to be right all the time. We're going to talk a little bit about letting the chart guide you, not your emotions. Too many people, and Unmal talks about this every day, you guys are letting your ego trade for you. Your ego has no business in this business, right? You're here to look at candlestick charts, right? Past price action helps predict future price movement. That's the whole foundation of technical. So bottoming tails and topping tails, what do they mean? Where they happen matters. Wide range bars, range expansion bars, narrow range bars, what are they? How can we use them, right? Prior pivots, context matters. Nothing happens in a vacuum. Read the chart, not your emotions. These are all the things you need to be doing. And you know, I try to ignore it most of the time, but as you guys know, I mean, we have hundreds and hundreds of people in the chat room, okay? And we have the same 10 or 20, 30 people, you know, posting and commenting. The other people out there not posting and commenting, you're the ones that don't have a trading plan, that aren't objective, that are letting your emotions trade for you. I know this because you disappear, right? So my point I'm making is not to get down on people. It's that while I'm telling you this right now, straight to your face, I'm telling you how important these things are, you're still not going to do them. You're not. There's somebody there right now listening to this lecture, and they're trading on their phone right now, just listening, going, yeah, that makes sense, Jared. That's cool, man. God, your lectures are so good. And you're trading on your phone, not taking stop losses, not having a trading plan. Remember last week we went through a day or two where I just harped on people over lack of pre-trade checklist, how a lot of people just trade with no checklist? And then people will ask a question. I'll say, well, why are you asking that question? How did it get through your checklist? Make sense? Right? Remember we talked a little bit about that Adobe trade somebody took. By the way, that person is taking PTS. Congratulations. I think that's wonderful. Remember Adobe with a $1 or $2 stop loss? How do you even get to asking me that question when you have a pre-trade checklist? It means you don't have a checklist. So all of these things are really important. And while you're tired of hearing me say them over and over and over, apparently you need to hear them over and over and over because you keep making the same mistakes. So we are going to make or put some focus today on a little bit of bottoming tails, where they happen and what they mean. Same with wide range bars and pivots and all this other stuff. But that's only a part of the lecture, right? That's only a piece of the lecture. You guys know this slide. It's one of my favorite all times, probably top 3, top 5 favorite slides in PTS. And you're like, oh, there it is. I don't know exactly, but I'm going to guess I spend somewhere between 10 and 30 minutes on this slide in PTS. It's a big boy slide, all right? It's a foundational slide, all right? It's one of those slides that if you don't understand it, it's going to be hard to be a good trader. So today I'm not going to get into crazy super detail with this because I've done it too many times in the past. This is probably the 5th, 6th, 7th lecture I've put this slide in. I don't know. I've done somewhere around 400 or 500 lectures through the years, and this slide has definitely been in a few. My point, though, is not everything is what it seems, but sometimes it is. Like, what? Yes. Sometimes what you see is what you should be seeing. And other times what you're seeing is tricking you. Okay? And we talk a lot about context, and that's the big word I want you guys to think about today. Context, context, context. Don't worry. We have multiple facets to this. I'm still looking like, holy shit, I have all these slides to get through. It's going to be a good one. All right, so on the left, we have a topping tail, and we move all the way to the right, and we have a big wide range bar, green bar, okay? And on the bottom, we have a bottoming tail, and all the way to the right, we have a big wide range red bar, okay? That's great. Most of you can tell me what these things mean. But if you can tell me what they mean, then why aren't you using them effectively, right? A lot of people will tell me, oh, Jared, a bottoming tail means that, buyers and sellers fought a battle and, this is a bullish sign and blah, 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 blah. That's great. But you're not using them effectively in your trading, right? So let's take a look at both of these for a second, and then I'm going to move on because, again, I don't want to spend too much time on this slide, right? You guys have seen me do this before. When you take a look at this, okay, this is basically what that is, right? When you see a topping tail, it used to look like this, right? We've done this 100 times before. It used to look like this. And what happened? As it got to the top, it started to do this. What is that? That's sellers creeping in. And then that. And what's that? More and more sellers creeping in. Okay? And what's that? More and more sellers creeping in. And then what's that? More and more sellers creeping in to finally get to a point where 80% of the bar is a tail. So in your mind, how should you be viewing this? Let me help you, because people are visual. Most people are visual. You should be viewing this like that. That's the way you should really be seeing that bar visually. Because again, most people do better with visual representations of things. That's how that bar really looks. Okay? That's how the bar really actually looks. Does that bar look bullish to you? Does it? The answer is pretty easy, right? No. Bar doesn't look bullish. It looks mostly bearish. Now, obviously, context matters, and we're going to get to context next, all right? But when you see a topping tail like that, well, that's what it means. You take a doji bar like this, and what do you have here? You have something that looks pretty much like that. Well, that's not terribly definitive, is it? It's a battle back and forth between buyers and sellers. Okay? And there's largely a stalemate. Maybe the buyers win a little bit, 60-40, but it's largely a stalemate. Okay? Now, this, at one point in time, you know where I'm going with this, right? At one point in time, it looked like that, right? At one point in time, it looked like this. It really did. We know it started right here. See where my cursor is? We know it started right there. Come all the way down is red, 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 red. It was just a big-ass red bar. That's fairly bearish, isn't it? It kind of looks like bar number one, but that is not how it finished. It finished like this. So now you can look at that bar like that. Right? That's a pretty potent bar. And I know the words you guys know are coming out of my mouth momentarily here. It's battle tested, right? It's been in a fight, and it won the fight. It passed, right, with flying colors. So when you look at something like that, it's pretty bullish. You know, and on the flip side, bearish-wise, you need to do the same exact thing, right? You need to look at these bars like this. Okay? That is a largely bullish bar. Largely. Okay? But after you understand the actual candlestick in a vacuum, that's only half the battle. Right? That's a candlestick in a vacuum. And if we go back a slide, give it a second, right down here it simply says, nothing happens in a vacuum. Nothing happens in a vacuum. So while we need to understand what the bar means, it's the core basis of what we do, you can't just look at it by itself. Right? Every time somebody places a trade, the trade forms a tick, the tick forms a bar, the bar forms a chart, and the chart forms a pattern. And it's from those patterns that we take trades. So a bar by itself doesn't mean much. But a bar in context with other bars means a lot. It means a lot. Okay? So where it's happening matters. It becomes much more or less potent depending on where it happens. And you guys know where I'm going to go with this because I do it frequently. You go right there, right? Just for sake of argument, you go right there, you go right there, and then we do this. Shit. Let's mess that up. Then you do that. How potent is that really? Do you want to buy the high of the day there? Probably not. But it is a good area to put your stop loss if you're trailing out, because if it breaks that area right there, that's a good sign. Or not a good sign, but that's where you want your stop to be. Because if it breaks that area, it's coming a lot lower. It had a battle there. Buyers won the battle, but it's not a buyable event. Right? It's not a buyable event. Okay. However, if you see the same exact situation, right, and we take this over here. In fact, we can just leave it on the chart, right? Let's just do this. Right? Let's just do this. There. Okay? Now what? Now you see red, 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 red bottoming tail. Totally different picture, right? Same exact bar. Nothing has changed. But where it's happening has changed. Okay? Now, what about this? What if we have something like this, and then something like that, and then, oh, I don't know, something like this, something like that, something like this, and then I see something like that. Now what? Pretty awesome, right? Pretty awesome right here. Because now you have bullishness. It's a tight range. Buyers are holding. They're holding in this upper 1/3, right? This upper 1/3. And then all of a sudden, sellers come in huge. At least they hold this area and come right back up. Oh my goodness. This stock should be doing a whole lot of this now. Boom. Right? Straight up. That's what we should be seeing. So where it happens absolutely matters, right? Where it happens matters quite a bit, you know? So the bar itself is important, right? Buyers, sellers, a battle was fought, etc., and so forth. But the location is just as important as the actual bar. The context in which this bar is forming matters. Okay? So, different candlestick bars. By definition, a wide range bar is a range expansion bar. Okay? It expands the range, especially if it's happening at the high of the day. A bottoming tail or topping tail may or may not be a range expansion bar, right? Maybe not. It could be a narrow range bar with a bottoming tail, but as we know, a true bottoming tail should be at least 50% of the size of the bar. If the bar is $1, the bottoming tail should be 50 cents. Sure, do we call other bars bottoming tail bars? Sure. But a true bottoming tail should be at least 50% of the size of the bar. Okay? So, a wide range bar or range expansion bar displays extreme commitment and emotion. Think reliability and confirmation. Okay? Why? Because most, not always, most of the time, a range expansion bar is a wide range bar. Right? And not only wide range bar, it's on volume. That's the key, right? A wide range bar on volume. Well, that should tell you something, because that wide range bar is likely, not always, but likely, breaking through some prior resistance area. And if it does that, if it breaks through the prior resistance area and it does it on volume, it shows you two things. It shows commitment from the buyers, and in showing commitment from the buyers, you're taking out the sellers. And this is something that people just don't think about enough. I want you to really give this some thought. When a stock breaks out of an area or has a range expansion through an area, it's not just commitment from one side. It's also completely annihilating the other side, so that there are now fewer people to sell into you while the stock goes up, making the move higher easier. It's like they've cleared out a path. There's no more bushes and trees in your way. It's all gone. We've cleared the path out for you. Does that make sense? So it's not just commitment from buyers that's important here. It's also that there's a lack of sellers because we took them all out. We eliminated them. It's important. It's a very deep, important concept that I just don't think a lot of people think about. Right? A range expansion can be an indication that momentum may soon slow or is close to reversing. Think about that for a second. Now we just changed it up on you. Sometimes a range expansion, guys, could be 3 or 4 bars up. They're not always igniting bars, range expansion bars. Sometimes it's a wide range bar on the 4th bar up. You get that on big volume. Now it's the opposite. Yes, we've expanded the range, but we've done it so much so we're tired. So a range expansion can be both. It can be that breakout bar, breaking above resistance, breaking above pivots. And it can also be that ending bar as well. It expanded the range so much there's just no gas left, right? Breakouts, breakdowns, especially after a consolidation, usually ignite a move in that direction. Now remember, and this is very important, there are breakouts and then there are buyable breakouts. Breakouts and buyable breakouts. Look, guys, technically speaking, a breakout is any time a new high is set, right? Anytime a new high is set, that's a breakout. You're breaking out to new highs. But it does not make it buyable. You can't have a breakout up 5 bars in a row, 6 bars in a row. And that's why, for example, this morning, Unmol was talking, I can't remember the stock, but he's talking about, hey, that stock looks higher today, but that monthly is so crazy, I just can't justify taking it. I think the stock ultimately went higher, but it's not the point. He stuck to his rules. He stuck to his guns. Okay? We think about it all the time. You look at a stock, and you're like, who is buying that thing? Like, who's buying NVIDIA at $1,150? Who? I don't know. The people that think it's going to $1,200, $1,300, right? Okay? So, breakdowns, they ignite a new move in the direction of the move, right? Okay? A narrow range bar or narrow body bar is a more reliable indication of a turn after a wide range bar. If you'll note, none of these things are happening in a vacuum. Sure, one bar can happen anywhere, anytime. But I'm not making my judgment, my opinion, based off one bar. That bar is simply what? The confirmation of what I have been looking for the whole time. Right? And you hear us say this all the time. You'll simply say, gosh, wouldn't it be great if? And then the if is, for example, if NVIDIA could pull back to $1,122, put in a bottoming tail on volume right at the prior pivot. Great. If NVIDIA puts in that bottoming tail with a volume spike, it's not about that one bar, is it? It's about everything that led up to that one bar. So I'm not just taking NVIDIA because of the bottoming tail narrow body bar. I'm taking NVIDIA because of everything that happened previously. The pullback, the red bars, etc., the support area, the moving average. The bottoming tail red bar or change of color bar just happens to be the last thing we needed to make the decision to take the trade. Multiple concepts converging, right? A bullish wide range bar followed by a bearish wide range bar and vice versa are powerful reversal signals, okay? This is that turnaround bar, right? Sometimes you get a bull or bear sandwich, but I'm not going to talk about that as much. But if you have a wide range green bar and the next bar is a wide range red bar, especially if it happens on like a gap down, oh boy. That's powerful stuff, potent stuff. So let's take a look. Okay, let's take a look. We're going to be here all day at this point. All right, what do we see here? Well, on the left-hand side, I see lots of slop and chop, right? Bottoming tail, doji bar, topping tail, green bar, red bar, green bar, whatever, bottoming tail, red bar, top, blah, blah, blah. It's pretty choppy, narrow range. There seems to be a little bit of a bearish sentiment over here, but still mostly narrow range. And then what happens? Bam. Wide range red bar. Igniting bar, right? This is igniting a move lower. What happens? Well, that igniting bar is so big, it didn't get that many more bars, right? This one red bar is the majority of this move. And then it pulls back here, bounces a little, right? Higher low, higher low, higher low, higher low. We're at about roughly 50% retracement. Topping tail, doji narrow body, narrow range bar. Isn't that what you want to see? This ignites a new move lower, but again, you can't expect after running a marathon for the stock to run a second marathon without any type of resting period. It's just not realistic. And this is why I never understood when people buy stuff, randomly buy stuff up or down multiple bars. It's like, well, your stock just ran a marathon, ran a mile, ran whatever. Now you're just not going to give it any resting period whatsoever. You're just going to buy the top or short the bottom. It might work. Sometimes it works. But your best bet is wait for a bounce. And you guys see me type this in the chat room every stinking day. Watch XYZ for a bounce sell setup. Watch XYZ for a pullback buy setup. I say it all the time. You'll see me write 2-minute SS, 2-minute BS on whatever it is. Every day I type it in there somewhere. Guys, watch AMD for a 2-minute sell setup. Why? Because we missed the initial move. If you didn't catch the initial move, now it's patience time. It's wait time. It's not jump in time. It's wait time. Now, despite me mentioning and saying that 4 times, 50 of you tomorrow are going to do it. You're just going to short the bottom. And it might ultimately work for you. You're just not going to be as good as shorting this sell setup. Okay? Anyway, you short the sell setup, drops a little, chops, kind of does a little double bottom, bounces, and then goes lower. But as it goes lower, what happens? Bottoming tail, big engulfing. That's like a 90% engulf. Well, we have a tough decision here, don't we? Why is this a tough decision? Tell me. And I'm not saying buy or short, but we're talking about a change in trend is what I'm getting at. Why is this difficult to know? Is this the end of the trend? Or might it still go lower? Why is this difficult to know? Talk to me, guys. Come on. Don't let me down now. Why is it difficult to know that this could be the bottom, but it might not be the bottom? We definitely need more information. There's no volume on the chart, Andre, so that's a given. Guys, come on, man. Talk to me. I don't want more information. I want you to tell me why. Here's why. One, we are still below the trend line. That's one reason this is tough to say, hey, a new move has been made. 2, we're still in a downtrend, hence below the trend line. 3, we have not put in a higher high or a pivot higher low yet. These are the things I'm asking for. Get your shit together. I'm serious. It's not a joke. All log off if you want to. You have to look at these charts this way. Don't give me this bullshit. Oh, I need more information. No shit. Obviously. But why? What information do we need is the question. What are we looking for to know? What is this more information? What specifically are we looking for? We're looking for a break of the trend line, a higher pivot high, a higher pivot low, maybe another bottoming tail. Rattle them off. You've seen this before. Get with the program or you're going to get used to having a boss all the time. You're like, whoa, Jared went from a calm 2 to an 11. Yes. It's not that hard. We are still below the trend line. We haven't put in a higher pivot high. We haven't put in a higher pivot low. But we're deeply concerned because now the stock has moved lower, a pretty good amount lower, with an engulfing bar that's about 90%. And this was a bona fide, genuine wide range red bar. That wide range red bar, albeit is the third bar down, should not have a 90% retracement in a weak stock. It may bounce 50%, but not 90. Then the next bar finally puts in a little bit of a higher high on the bar, not pivot high, but a higher bar high, pulls back, and now we have some more issues, but we are still under the trend line. Still under the trend line. Now, guys, real quick, before I get to the next side of the chart. Some people don't like being yelled at. Some people respond differently to that. But here's the difference. When you're sitting all at home alone by yourself, there is no one to light a fire under your ass. Like, oh yeah, I just didn't see that. I'll see it next time. Okay. Bullshit. The market's going to take your money next time. And that's the difference. That's the difference between having a trading buddy, an accountability partner, and a coach. I'm going to say it one more time to drill it in. That's the difference between having a trading buddy / accountability partner and or a coach. Going to Cliff's coaching or being in the chat room when I yell at you because you did something stupid. Let's be honest about it. Let's just call it what it is. When you make a mistake and no one sees it, you're a little disappointed with yourself. But what do you say? Yeah, I'll fix it next time. But then you do the same thing next time. How do I know? Because I did it. I'm raising my hand. I've done it 100 times over. So unless someone is holding you accountable to not do it again, you will do it again. Tell me I'm wrong. Here's an analogy. Tell me I'm wrong. You're driving 20 miles an hour over the speed limit, 10 over the speed limit, frequently, commonly. Why? Oh, you haven't got a ticket in 10 or 15 years. So while you're not speed racer and doing crazy, stupid shit, you're still driving over the speed limit. What happens the first ticket you get in 10 or 15 years? What happens for the month after you get that ticket? What happens? You drive a speed limit, don't you? Maybe 5 over. You know the line's like 10 over, so you drive 8 over. How do I know this to be true? Because it happened to me 2 years ago. I hadn't had a ticket in 20 years. 20 years. And I got a 60 and a 40. Thankfully, went to driving school and it got wiped off. But for the next month, I was doing 8, 9 over all the time. 8, 9 over. I know I'm safe. 8, 9 over. Well, that was 2 years ago. Guess what I'm back to? My old self. My old self. Because there's no one there to stop me. Bad habits, hard to break. Okay? Thank you, Jordan. Something that happened 25 years ago. Thank you, buddy. Anyway, see why you never tell people secrets? Anyway, let's move on, okay? We're only on slide 7. We have about 18 more slides to go. All right? Breakdown right here. Nice breakdown, right? Little topping tail, topping tail, topping tail. Green bar comes right back down, and the stock just tanks, right? Tanks, okay? Right here, right here, right here. Wide bar, wide bar, wide bar. But this is likely an ending bar because it's the third bar down, and the 2 previous bars are also wide range bars, okay? What do we get? A little topping tail. Now, this topping tail is good for shorts? Well, if you're in the stock, yes. Is it a shortable opportunity? No. But if you're in the stock, yeah, you're looking at the topping tail going, okay. Now, the stock bounces back up. Higher low, 2 or more, okay? Higher high, higher high, higher high, 2 or more, okay? Now, if we take this breakdown area right here and we take the low, what roughly, I'm asking roughly, what percentage retracement is this? We go from the bottom, the breakdown right there, where it first broke down, to the bottom here. Roughly, what percentage retracement is that? Roughly. Talk to me. Well, I would say probably in the 30 to 40% range, right? Something like that. Let's take this bar right there. That's fairly accurate. Let's put it on top right there. Wow. Actually, a little more maybe. Maybe 40 plus, right? So I would say 40-ish, maybe even a little more. Is that an acceptable range for a sell setup, the retracement? Yes or no? Is that an acceptable bounce for a potential sell setup? Yeah, it's in the range, right? It's in the range. That 40% area, it's in the range, right? So now you have this, and technically it triggers here, and then you see it over here. So if you shorted this, would that be a crazy thing to do? No, it wouldn't be crazy. It wouldn't be insane. But what do we have to factor in? Give me 2 things, 2 quick, big, important things we need to factor in before we short this stock. 2 things we'd want to factor in. You can give me 3 or 4. There's a bunch of them, but give me 2. Michael says ATR. Okay. Yeah, range ATR is certainly going to be something, right? There's kind of 3 things I would immediately think of, before I even got into the details, all right? I'm thinking of the range, the overall range of the stock. I mean, if we're at like 200%, I may not short this. Market condition, right? Maybe the stock has been slightly weaker than the market. Maybe the market's down $7 or $8 on the Qs. Yeah, I don't think I want to short this if the market's down $8. Okay? So I'm immediately thinking about the ATR of the stock and market conditions, and then it combines with those 2 things, right? It goes hand in hand with those 2 things. The expectation of the trade. What's my expectation? Am I a 2 RL or nothing trader, 3 RL or nothing, 4 RL or nothing trader? I'm probably not going to take that. Probably not going to take that. Right? So you have to consider those things before you take it. Then, gosh, I'm taking way too long on this slide. Jeepers. I should have made this 2 lectures, guys. Honestly, I should have made this 2 lectures. Now, this comes down and retests the bottom. Now you have genuine concern, don't you? The red bar is fine. There's nothing wrong with the red bar, right? It's got some topping tail, bottoming tail, fine, no big deal there. But then this bottoming tail bar comes in and it just doesn't stop, right? It just doesn't stop and takes this out. Now you know it's over. Second you break this prior pivot high, it's over. So here's the question, not on the chart. Here's the question, not on the chart, okay? Right there. I'll make it pink. On a lower time frame, viable, yes or no? On a lower time frame, let's assume we're on a 5, you drill down to a 1 or a 2. On a lower time frame, viable, yes or no? Yes, possibly no. Wow, talk about a different spread of answers. Mostly yeses. There are a couple no's and a possibly in there. Probably. Back into resistance. Back the truck up. Oh, wow, getting more confident here. Yes, the bottom has been set. Ooh, good question says 1. Well, like we do with everything, I'm not Nostradamus. I talk through my trades the same way you should be talking through yours. 1, what are some positives that would make this viable? Well, double bottom retest is a positive, particularly if the ATR has been met, right? If the ATR on the downside or the daily ATR has been met and you put in a double bottom and there's some significant volume, then that's a positive. The fact that it's pulling back to, hold on, this general area, right? The ceiling becomes the floor. That's positive, right? We'll make that orange. Could make it green, I suppose, right? That's positive. Okay. There's a failed sell setup. That's positive. Okay. Lower time frame probably gave you a bona fide pattern. That's a positive. Okay. So, this is how you need to look at it. What are the odds of this stock putting in a new low today? After everything we just talked about, what are the odds of this stock putting in a new low today? Slim, right? Pretty low odds, right? Unlikely. So, if you factor that into your decision, compensate for that, it's probably a decent entry. Now, the negatives, we're not in an uptrend, and we really only have one higher high and one higher low. I don't really consider this a higher low at the bottom. It's an equal low at the bottom. So I really only have one higher high and one higher low. I'm in a transition. I'm in a micro time frame transition. So again, market conditions would matter. ATR, expectation, volume on the bottoming tail would all matter. But I have to be honest, these 2 green bars, they're potent. They're tempting. In a stock that was this weak, and now you're getting wide range bars like this, stocks pulling back near support, failed the sell setup, bottoming tail, I would say there's a good chance you could take that. But, as you know what I'm going to say next, personally, I'd give it some room. I wouldn't give it under the bottoming tail. I'd probably give it under this bar, under this bar right here, right there. I'd probably give it under there. I'd give it some room. Look for a possible area to add later. Wow. Wow, wow, wow. I could literally cut the lecture off here and we'd be done for the day. Now, I guess we're going to have a 2-hour lecture today. Man, I may have to divide this into 2 lectures, guys. So, candlesticks only matter in context. They only matter in context. By themselves, in a vacuum, worthless. Truly worthless. So when you look to the left, we have a situation that's stronger and one that's weaker. Well, that's pretty obvious, right? Because the level and depth of retracement here is much more significant. Here's a stock that did about 150% retracement. So not only did you take out some of the red bar, you took all of it out, plus other bars to the left that we can't even see. So this is super potent. These sellers are gone. But if you go over here to the right, we have a big wide range red bar, and we've only taken out about 30 or 40% of it. That's a problem. This could simply be setting up a bearish 3-bar play for all we know. We know this isn't the case on the first one. We know that's not the case. Buyers are in big time control. Right here, not so much. Not so much. In fact, after a wide range red bar, you kind of expect something like this, don't you? The larger the reversal bar is in relation to the prior bar, the more potent it is. The level or depth of retracement into the prior candle increases potency. Here's another example. On the right-hand side, we have a stock that's red, or a bar that's red, sorry, a bar that's red, and then gap down. The gap down takes out about 70% of that bar. It's pretty serious. Over here, we have a wide range green bar that, talk to me, gaps up. This actually gapped up. See, a lot of new traders you don't think inside the chart. You need to be visualizing what this looks like on a 60-minute. On a 60-minute, there's a big-ass gap right here. Okay? So this is green, 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 gaps up. It opens right here. On the next day, it opens right there. And then sellers come in. Now, what's the difference here? Well, the difference simply is, one, on the right-hand side, profit taking most likely. Like, wow, well, I got a wide range green bar and a gap up. Yeah, I'm going to sell some of my shares. Okay, but they're not really digging into enemy territory. You're still right near yesterday's high, right? You're right near yesterday's high. This one over here, you closed the day right here. You closed the day right there. You wake up the next day and it's all the way down here. What happened? You penetrated 70% into enemy territory. Much more potent. So again, 1 bar by itself doesn't mean anything. 2, 3, 4, 5 bars, those form patterns and trends, right? Note on the bottom, the size and number of candles matters. Over here, 2 smaller bars canceling each other out, a little bit of a tug of war. Okay. Over here, you get a bigger green bar, gaps up, that's bullish, gaps up, but note on the pullback, it continues, right? It continues to penetrate into enemy territory and does about a 90% retracement. So that started out really strong on the gap up and then eventually just failed and took out 90% of the first bar. Over here, same green bar as this one, same green bar. This is a stock that did what? It opened lower. Opened lower. That's where it opened. Okay. Came all the way up here. This was green at one point. You see, this was never green. You see this right here, the second one? This was never green. It gapped up and just rolled over. You see, this was, at one point, this area was green. Okay, now remember, try to do this a lot. You need to look at it like this. It's how you have to look at it. Just like that. Why is this more potent than the one next to it on the left? Because Buyers made an effort, a big effort. In fact, they put in a new high, and they failed. They made a strong effort to put in a new high, and they were unable to finish the job. And not only were they unable, they came all the way back and closed at the low, as if it wasn't bad enough closing here, right, at the open or wherever, right? Now they're closing at the low. So they made an effort. The seller said, "Ha, that's cute, that's funny." Smack. Closed down here. 120% retracement after a battle. This is very potent. Very potent. Over here, and some people wonder, well, why is this more potent? Because the bar is bigger. You're taking out more, right? Now, could you argue these are similar? Yes, you could make an argument these are similar. But this stock closed at the high right here. Gaps up very slightly, not much. Small gap up. And just continues to get crushed. Takes out the wide range green bar. These are similar in potency. Okay? 3 and 4 are similar. 5, why? Why is this more potent? Because once again, this was green. Buyers were doing a nice job. Right? Buyers come in on the first bar. They did a real nice job. They come in on the first bar. All right? Then, over here, the stock puts in a higher high. Buyers are doing nice, doing a great job. And then they get smacked. And not only does it get smacked, it continues to get smacked on the next bar. It's happening over a longer period of time. Okay? So when you take a look, location, level, and depth of penetration matters a lot. It matters a whole lot. Okay? So, the context matters. Let's take a look. All right? We have a stock here on the left that's kind of chopping sideways, just chop, 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 chop. Then, big red bar. It's actually a small gap up, and it gets crushed. I mean, crushed isn't an appropriate word here because this is a $10 bar. Bounces, sells off, bounces, gaps down the next day. But here's the key. On the gap down, the first bar of the day leaves a big time bottoming tail. Now, so the question here is this a good bar to short into? Is this something you typically want to take a sell setup into? No. You don't generally want to take a sell setup into a, I don't know, $4, $5 bottoming tail. This actually was looking like it might want to go higher here, right? See, this is almost setting up almost a little mini wedge, little flag, right? But sellers creeped in, pushed the stock lower, but then what happens? Another bottoming tail at a similar area as the previous bottoming tail. So not only do you have one bottoming tail now, you have two. Now we're in the slop area, the slop fest. Why? Because we put in a double bottom after a significant move. That's bullish. You're trying to set the low, and it does. But when it bounces back up, you still haven't put in a higher high yet. And then it pulls back, gives you bottoming tails. Good, good, good. You're thinking maybe long. Still hasn't put in a higher high yet, and just stays here. So by the end of the day, while you believe strongly that the 135 area low has been set, you're also questioning the strength of the stock because it wasn't able to actually bounce. Does it make sense? So yes, bottoming tail suggests buyers. Second retest bottoming tail suggests more buyers, and the low has likely been set 134, 135, but it was unable to put in a higher high. Finally puts in a higher low, but it can't consolidate the higher low by putting in a higher high. It just won't do it. It's just stuck. So now you wonder, is this stock going to go higher? Well, the answer is the next day, yes. Am I trading it? No. But it goes higher, pulls back, bounces, and then fourth day in gets crushed again. But another bottoming tail. So now here is the question. Here is the $64,000 question. Right here on this little doji bar, right there, Can we go long here above this bar? Right? Right there where my cursor is. We'll put a little arrow on it, okay? Right there. Yes or no? Can we go long here? Talk to me. Talk to me, Goose. Can we go long here? You guys are pretty quiet. KL says no. Rustlin, no. Loveless depends on expectation. Does it? I mean, let's be honest. It's a smooth room back to 145, right? I mean, you have about $8. Seems to me like there's at least 2 are there. Mike says needs more confirmation. Ticker says yes. Maybe if the lower time frame we can find a better setup. Yes, no, yes. Retest. You see what makes the market move? Yes, no, yes. That's what makes the markets move, right? Aggressive. Yes, 2 higher ties. Yes, tight stop, double bottom. Well, the tight stop is not the correct answer. We never worry about if it's a tight stop or not. Okay? Aggressive entry. Let me ask you guys a question. What are the odds this stock breaks 135 after this bottoming tail, and this bottoming tail? What are the odds? High, middle, low, slim. Okay. Now, the other thing to consider is our trusty old trend line, give or take. I drew it fast. Give or take is right about there. It might be a little lower than that, maybe like there. Okay. All right. We broke above the trend line. We put in a higher pivot high. We broke this high. We put in a higher pivot low and kind of an equal high. Now we have like a little M top with like a W bottom. So if I drill down to a lower time frame, because this is like a 15-minute chart, if I drill down to like a 5 or a 2, I'm probably seeing some good stuff here, right? Probably seeing nice bottoming tail. So if I do choose to get into, say, let's call it 137, it stops under 135, maybe 134. What are you really risking here? While I agree with you, it's not the world's best pattern. I agree with you. But what are you really risking? You're risking the unlikelihood that this stock breaks a triple bottom low, of which all 3 times a big-ass bottoming tail came in. Not a little one, a big one. Okay? Think about what I'm saying. So when you balance the risk to reward, you go, well, 3 times it's come to 135, and 3 times it's hit. Buyers came in not a little bit, but a lot. So the easiest thing to do here would be drill down to a 5-minute, find an entry at 136-ish, and give it some room. Give it under the low of the low, right? So give it down under this area, right? Maybe give it a dollar under the low or something. Why? It's a stock that moves $10 a day. Even if you got back to the opening price of like 143, 142, whatever it is, you're still looking at a $7 move up. $3 stop loss seems to be reasonable. 137 by 134. The odds are high that this stock won't stop you out. The odds are high that this stock won't stop you out. One more comment. Judging off this chart, this stock moved from 142 to 135, $7. Guys, likely, and we don't know for sure because we only have 5 days here, 1, 2, 3, 4, 5. Likely, does this stock typically do a lot more than $7 a day? Typically speaking. Not from what it looks like on the chart. Right? It may sometimes. Over here it did $10+ here it did 10. This day it didn't, but overall I bet you $7 to $10 is probably the ATR. And you're already moving down $7 with a triple bottoming tail. The odds start to increase once you put the pieces of the puzzle together. The picture starts to become clearer. Context matters. Context matters. All right? All right, one last slide. I can't get through. I literally have 16 more slides to go. We're going to have to divide this into next week's lecture, okay? Apologies. We'll have to divide it into next week's lecture. All right, last slide for today. On the 60-minute chart, stock gaps up small, moves up, pulls back, moves up, chops, 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 pulls back. Okay? So, $5, $10, $12 move, okay? And then what's it do? For about 2.5, 3 days, okay? 2.5, 3 days, it rests. And it pulls back. And it looks like it's about to break the green line and head down to 155. Okay? That's what it looks like right here, because this bottoming tail right there didn't quite hold. But the next day it gaps up. There's a double top here, isn't there? See it? There's a double top here. It goes right up to the double top, smacks, and leaves a bottoming tail, but the bottoming tail holds support. Now, one's a 60, one's a 15. Take a look at both, because we do not trade in vacuums. So here's the double top on the 15. You can see it right there. 162.50 or something. Pulls back. We started like, oh my gosh. Like, we can look at it right here. Like you're saying to yourself, oh my gosh, it may break support. Remember, support and resistance are areas. It peekaboos. Peekaboo is a little bit under that area. And then the next day gaps up. So, if we now get why, because it tested and passed the test, if we get above the red line, it's money time, right? You can either buy above the topping tail or possibly wait for an alternative entry, a pullback. In this case, it was a little bit of a breakout, decent breakout, right? But once you get above this red line, you're good to go, because that's the area where it was resting and consolidating on the 60 and the 15. And here's the key. It did break some support, and it looked like it was going to go lower. And the buyers came right up and took out this pivot, and even this pivot. So one pivot, two pivots, and this double top as well. Stock's going higher. Anytime you have this much strength to the left, consolidating, it's just a little peekaboo. Gaps up, you're good to go. Okay? That is how you read this. Now, one last part. What's the message here over here? Next day, stock's already moved up quite a bit now. So you went from like 157 all the way to like 167. So $10 move. That's a big ass move. Gaps up, pulls back, but gets completely engulfed. Yes or no? That 3-bar play. Yes or no on that 3-bar play? Super 3-bar play. Yes or no? Oh. Andre says add. Herman says buyers are in control. Everyone else, very quiet. Not for me. Extended scalp, extended yes, no extended yes. Again, note how we have a differing of opinion. It's what makes the world go round. It's what makes the market move. It's tough, isn't it? Because in a vacuum, this is great, right? You literally have a super 3-bar play, a wide range red bar getting engulfed by a wide range green bar with a bottoming tail. I mean, it's like perfection. But when you look at the 60, ooh, right? Because this is really what you're looking at. That's really what you're buying the high of, okay? I want you to take a look at that. That's what you're actually buying. 1, 2, 3, 4, 5, 6, 7, 8 bars up, and you're buying the high of that. Okay, let's do it. It's over here. That is that. That's what you're buying. Does that look different now? Here. Give me a sec. Hold on. Give me 1 sec. Take me a second. Okay. Let's make this easy for you guys. All right. Let's make this easy for you. Okay. That's what you bought. That's what you bought. Just showing it to you, just so you can see. 1, 2, 3, 4, 5, 6, 7, 8 bars up. That's what you bought. It's not messy. It's not messy at all. It's actually beautiful. It's just too extended. Again, it's not messy. It's just perfect higher highs and higher lows all the way up. If you want to buy that high, damn, that's tough. That is how you have to look at everything. Everything you do in trading. It's not a messy decision. It's a very simple decision. It's up 1, 2, 3, 4, 5, 6, 7, 8 bars in a row. Right out of professional trading strategies. 3 bars up, think sell. 4 bars up, really think sell. 5 bars up, really think sell. 8 bars up, really think sell. Okay? It's not messy. Nothing about it. It's simple. The answer is no. Could it go higher? Of course it could go higher. But that's the way we trade. So, I don't know that you guys do this that often. Do you actually cover the future of your charts and really look at them on multiple time frames? Right? Is that really hippiness? Think sell from PTS? Not sure. I missed that there. Anyway, point I'm making. This is a pretty easy decision. And you guys made it tough. Because you didn't look at the higher time frame. It's a pretty easy decision. Now, the message here is higher prices. But we can also see it got really tired. You know, you get in at 170.50, it goes to 170. You may have been able to scalp something out of that, but that's not for me. The 60-minute keeps me out of it. Maybe a tick chart 1-minute scalper, maybe, but not for me. And that's a 15-minute 3-bar play. So you're going to have a wide stop on it. Not for me. It needs to pull back to 165, and I'll consider it. All right? So, we're going to have to call it there, guys. All right? I got through 10 slides today. Great. I have 26 slides in this presentation. 25, sorry. And I got through 10 of them today. We're going to have to save the rest for next week, guys. So we'll just do this. We'll just go right to the end, okay? I hope you guys learned a little bit about candlestick charts and digging deep inside candlestick charts. There's a lot to be learned in candlesticks. And again, I want you guys to think about this deeply, I guess, is what I'm trying to say. Look, the things we don't like to do are the hardest things to do, but they're the ones you need to do the most, right? Like you have a down day. Filling out your tracking spreadsheet's not fun. Filling out mine yesterday wasn't fun. I went right to it. So just get it done, Jared. Just get it done. I want you guys pulling out charts all the time and looking deep into them. Bar by bar, bottoming tails, topping tails, cross-referencing it with higher time frames, lower time frames, market conditions, ATR. I want you getting the entire picture. Remember the analogy, 1,000,000 times I've made it. The forest from the trees. Take your little helicopter, fly above the forest, and get the big picture. When you have the big picture, then you land the helicopter, start climbing the tree. But you still bring a picture of the forest with you. You don't forget about the forest. You looked at it once, that's nice. You go down to the branches, the bark, the leaves of the tree, and you still keep that picture in your back pocket. And then you cross-reference it when you're ready to take a trade. All right? So I hope today was a bit of a lesson for you guys, even though I didn't get through nearly, not even half of what I wanted to get through today. But I hope it was a lesson about being diligent. really digging deep and looking into this stuff, you can save yourself a lot of headache. The worst thing that can happen is you have a chart like the last one and it works, because then you'll feel justified in doing it. So hope you guys learned a little bit. Hope it'll make you a better trader. I'm Jared Wesley of Live Traders. We'll get back at it again next week.